Welcome to a new update today on Saturday, in which we are going to discuss the Bitcoin on-chain analysis. We've not been covering it too much yet, but we're going to do it today as there might be some interesting signals saying that we are getting close towards a Bitcoin's bull run, but we're also getting close to a Bitcoin supply shock. So that's what we're going to cover in this update today. But before we're going to continue, make sure to subscribe beneath, like this YouTube update, and check me out on Twitter and Instagram, where you can find daily content. And today there's also going to be a new release on the Day One Lifestyle YouTube, in which it's going to cover altcoin trading, and I'm part of that series, so definitely check out the Day One YouTube channel. Now, when we're looking at the price action of Bitcoin, you know that it's going quite flat, but the on-chain metrics are showing some interesting key factors here, and that's what we're going to cover. So let's head towards that part and let's get towards the charts where we can discuss a ton of information. So when we're looking at the Bitcoin balance on exchanges and we take all the exchanges that we have here, the number of exchanges have been making an all-time high here when it peaked at the March crash of the Corona crash, or March 2020 period, which was the Corona crash, and that was the all-time high for the balance on exchanges. It has been trending down since, and it has been trending down even heavier recently, as we can see with the current downwards trend here. The ultimate information that we can get out of this chart is that the price or the volume of Bitcoin's balance on exchanges has been decreasing heavily, although the price has been relatively stable. So the balance on exchanges has been dropping down swiftly, and the price action has been stable. And I'll be covering the lower time frame in a little bit. But it's saying that if there is a certain desire for a supply shock, by having such a low amount of Bitcoin balance on exchanges, it could be heavier, and the price shock could be implied to get bigger than when we were having a ton of Bitcoin on the exchange in itself. When we're looking at the lower time frames, which is the 2 years, we can see that in the last few months there has been a rapid decrease in Bitcoin balance on exchanges, as it went from 2.6 million towards 2.4 million, which is going quite downhill in the past period. And what usually happens with such a downward trend is that when the balance on exchanges drops down, the price action of Bitcoin has a result that it goes up even heavier. So when we see in this chart, since 2020, the balance on exchanges has been dropping down significantly as well, and the price of Bitcoin has been accelerating. And with this low here, it marked the previous stop of the Bitcoin price action, which resulted into Bitcoins going towards the exchanges, resulting into this correction, as Bitcoins have been sent there, as people have been taking profits massively at that point. Right now we can see that the Bitcoin balance on exchange is dropping down heavily too, but the result is that the price is still remaining relatively flat. So we're still waiting for the actual price action to price in this downward trend. And what could be an actual reason for the fact that it's dropping swiftly here? That is Russia and Ukraine. A contributing factor of this might be the Russian invasion into Ukraine, and all the sanctions that are lining up with this war, as exchanges has become stricter with KYC policies as well, and funds have been frozen, so people could have been taking it out from the exchanges into hardware wallets out of safety reasons. So that's why there might be a reason why we're still seeing a delay in the actual reason or in the actual price action, which usually comes when the balance on exchanges drops down. Then we've got the liquid supply chain, which is also an important one that we have to take into account. We can see it on the screen here, and right now we can see that the liquid supply chains is hitting numbers we have not been seeing for a long time. We've not been seeing it since 2021 and 2020. What does it change? Well, the monthly 30-day net change of supply held by illiquid entities, if it's green, it shows that the amount being held by illiquid entities is significantly high. And at this page, Glassnode defines illiquid supply as entities that hold over 75% of Bitcoin they take in. if many Bitcoins are illiquid, a supply shock or a supply side crisis emerges, which has a weakening effect of Bitcoin's selling pressure on the market. So the more it's not moving, or put differently, a sustained rise of illiquid Bitcoins is an indication of strong investor holding sentiment and a potential bullish signal, which you can see that we've also been having in 2020. We've had a period of a flip here, but we mostly had a period of a flip of this illiquid supply chains after the big bull run, as during the bull run the illiquid supply chains increased significantly, and that results into a big sell-off. What we see now is that since last summer, price action of Bitcoin has remained relatively stable, and during that period the illiquid supply chains has been increasing significantly, meaning that there is less reason for investors to sell their positions. Fundamentally, they don't see a reason to do so either, so they just stick to that position, and when the run starts to happen, we can expect another vertical move like we have been seeing in the previous period from September 2020 all the way towards March to April 2021, combined with the fact that the balances held on exchanges has hit a very low level and is dropping heavily, could be a reason that this supply shock can be quite vertical. Now another one is a chart that I got from Will Clemente. He made a chart with wills filtered from all known entities, and what it shows here is the fact that the wills are accumulating, or at least the positions are increasing quite heavily. Will holdings dropped significantly during leading up to the first stop of the 2021 run. As we can see, the price action has been running up with Bitcoin, and when we started to get into the high territories, the will holdings have been dropping down, which is the red area here, and the will holdings have been increasing during the period that the price action has dropped significantly and has been dropping since, and now we're increasing or building up again, which could be an ultimate result of the markets ready for a big bull run, just like we have been seeing in 2020. So it's on the rise again, so it could signal that we are going to witness a new leg up, as wills are buying in anticipation of such a move. And wills are usually defining the markets, whether you like it or not. There's two reasons. The wills are so big that they can move the markets, and second, we use the data that they have, or we use the moves that they do to actually define our own trades. It's also happening in the assets or in the equity markets. So I think it's an important one that you should be taking into account, and it can still take a little bit of time before the impact can actually be seen. Now there's also another thing that we should be covering, which is the current correlation that there is with the dollar and the current correlation that there is with the tech stocks. The correlation with the dollar is quite high at this point, and the correlation is not positive, it's actually negative, and that's what we can see in the current chart. What does this chart tell you? Well, first of all, it's the Bitcoin US dollar, which are the candles here. The orange line is the DXY index with the axis on the left. What does this blue line here say, or the blue button on the bottom? It tells you the correlation. So the correlation is 0 in the middle. On top, it's close to 1. And when it goes down, it's close to -1. And the correlation tells you that if it's getting close to 1, then the price action is comparable to each other. So if Bitcoin goes up 10% and the DXY goes up 10%, the correlation is 1. Or at least the movements are close to 1. When Bitcoin goes up and the dollar goes down the same amount, the correlation is actually getting towards -1. That is what you can see here, and in the previous period, which is actually already since the entire sideways movements have been starting, we can see that the correlation between the dollar and Bitcoin is close to -1. Right now it's a very strong correlation, which is also a very important indicator that we have been seeing in the past. What can we see here? First of all, during the bear market of Bitcoin in 2015, we have seen that the dollar has been showing strength. The big impulse wave of the dollar happened in that period, through which the Bitcoin price action dropped down, and it's telling you that the Bitcoin price is not doing well when the dollar is acting quite strong. Now we had a period of sideways movements here, result that the Bitcoin price actually started to do well, and then At some point in time, we can already see that the dollar has been showing weakness in 2016 to 2017, resulting into the big bull run of Bitcoin. Then we had a big strong period of the dollar, which ultimately didn't lead towards new all-time highs of Bitcoin. Had some periods of runs, which obviously we were into a bear market then. And then we had the corona crash with the dollar, resulting into the big bull run of the Bitcoin price action. Right now we can see that the correlation is negative again. The dollar is doing well, and actually Bitcoin is remaining relatively calm. So the moment that the dollar is going to correct, which can be next week and which might be already right now, that is most likely going to be a trigger for Bitcoin to start running, which means crypto starts running, which means that risk on assets like the S&P and Nasdaq index are going to run as well. Then finally, we've got the mean hash rate as well. And we've got a chart here with the past 2 years on the hash rate. Even since the summer of the 2021 crypto crash, when China banned the mining of Bitcoin, which we can see here, the hash rate has been trending up. And usually when the hash rate trends up, the price action will follow through. At this point, we can see that it's not the case. So we have reached a new all-time high with the hash rate, but the price action is not following yet. It's fundamentally strong for Bitcoin though, that it shows that the demand for Bitcoin, mining Bitcoin, is increasing, as hash rate is the measure of the computational power per second used when mining. Bitcoin's hash rate is also a proxy for how secure the network actually is, with a higher hash rate meaning more computation power is used to secure the network, thus making the Bitcoin network more secure. So in that case, we can get towards a few conclusions which we should be looking at. 1. The Bitcoin balances on exchanges is dropping down. Whales are accumulating quite heavily. Illiquid supply is increasing significantly as well. The mean hash rate did get into a new all-time high, and the correlation is extreme with the dollar. But the price action of Bitcoin is remaining flat, and there is still an impact going to bring to the markets based on all those indicators, so there will be a result of that into the price itself. It's always moving together. So the conclusion that I can draw is that Bitcoin is ready for the big bull run. The question is though, when is the dollar going to correct, and when is it giving risk on assets space to start moving again? That's what we have to find out, but based on the on-chain analysis, we are ready for a big run. And I'll be seeing you tomorrow for a fresh new update. Don't forget to subscribe to this YouTube channel. Don't forget to follow me on Twitter and Instagram. Check out my newsletter and platform beneath, and have a wonderful day.